Hi, this is Cary with Wicked Signal, bringing you another video analysis recorded on Monday, February 15th, 2021. This one on Match Group Incorporated, symbol MTCH. You're probably familiar with this. This is the company that has a host of dating websites, including Tinder and Match.com. There's no doubt that this has been on a tear since the COVID low of about a year ago almost. And I'll get to that in a moment. Before I jump into Match Group Incorporated analysis, I just want to remind you to tell your trader and investor friends and yourself, if you haven't yet, to go to the wickedsignal.com website, click on the free subscription form, fill out your first name, last name, and email address, and you or they will receive a new email notification every time a new video analysis is ready for viewing. I won't fill your email inbox with a whole host of marketing offers, and I will not share your personal contact information with anyone outside of the organization. So let's jump into Match Group analysis. This is, by the way, it's an internet and technology company that is headquartered in Dallas, Texas. It owns and operates the largest global portfolio of popular online dating services, including Tinder, Match.com, OkCupid, Plenty of Fish, so forth and so on. And you can just look at this chart, and there's no denying its a bullish nature. It's actually doubled in the last year. Part of that is, of course, the world that we live in right now, with COVID and quarantining and so forth and so on. Opportunities for meeting new people have been severely limited. The only viable way to meet people in many respects is by online dating. So no surprise that this stock has doubled in value over the last year. The real purpose to this video for me is there's been a number of buy recommendations, understandably, on this stock over the last few months. And my underlying message right now is not so fast. This, despite the fact that we've pushed on to new highs just last week. I'm going to break this chart apart and show you. But before I do that, I just want to give you a sense of the extremes since 2015. 1617 high, 841 low. That area held for a year or two before it began its sort of upward move. We got to 95.31 in 2019. The COVID low of 2020 was 44.74. And, just last week we put out an all-time high of 174.68. Now, you know that I like to look at structures, chart formations, and you can see that there is a rising channel top. I'm actually going to zoom in and take a closer look at this formation, and you can see that it actually has held the highs essentially over the last couple of months. You've got 159.81 was the channel top when this was tested. Was that in December of 159.53 was the high, so it came very close to testing it. It was an essential test because it was inside the 1% threshold. And then again last week, the high was 174.68 while the channel top was 175.32, and this market backed off Friday to close at 169.53. Now, of course, there's no denying its bullish dynamic. If you were to eliminate and erase this channel formation, you would, you could see we pushed to new highs, and we very well may take out that channel top. That this week, the week of Tuesday, really, February 16th, because Monday was President's Day, is at 177.26. And it rises 4 full weeks later to the week of Monday, March 15th to 185.01. And as per usual, you can subtract those out, divide by 4, and you'll have the exact location of that channel top each and every week in between. This is a structure that can contain buying, I want to say, through March trade. And I say that cautiously and with some degree of hesitation because there's no denying that we're at all-time highs and we pushed through recent highs that were placed in December and January. And so there's a part of me that, that just wants to tell you to exercise caution. I just guessing that you're not long this stock right now. If you are, you should respect 177.26 or that channel top for its ability to contain buying through March. And from here, now that we've essentially tested it, the market can back off over the next, 2 to 3 weeks, 3 to 5 weeks, let's say between now and the end of March, to the channel base, which is at 135.10 this week, the week of Tuesday, February 16th, rises to 142.79 the week of Monday, March 15th. And once again, you can subtract those out, divide by 4, and you'll have the exact location of that channel bottom each and every week in between. This area is in reach between now and the end of March, and it can, by the way, absorb selling perhaps through the second quarter. There's two scenarios here that I would buy match group. And that would be on any bearish retracement down to that 135.10 channel bottom, rises to 142.79 that week of March 15th. I would buy it on a dip in that vicinity, or I would buy it with a settlement above that 177.26 channel top, which rises to 185.01 the week of Monday, March 15th. Inside of that, if you're looking at the 3 to 5 week time horizon, 2 to 3 month time horizon, we could easily trade inside this channel structure through March into April, May perhaps. So I would certainly buy aggressively the 135.10 channel bottom. But until, and there's the only other scenario that I would buy it, would be a settlement above 177.26. And by the way, I would want that by a 1% margin. And yes, you can buy it on a daily basis as well. In other words, you don't have to wait for Friday to settle above 177.26 at the end of this week. You could buy it on Tuesday if we settle above 177.26 by at least a 1% margin, which would be $1.77, which would be 178, 179.03. Yes, am I doing the math properly here? I think I am. Yes, 179.03. So, if we close Tuesday, 179.03 or higher, or Wednesday or Thursday, 179.03 or higher. Certainly the end of the week, Friday, 179.03 or higher, which is a 1% violation beyond 177.26. It's an arbitrary number, but it's one I've used for a long time, and it works well. We could close any day at 178 even or 178 half. And that's merely just stretching the rubber band. That's the analogy that I use. And the market could quite easily back off from those price levels, despite the fact you've got a violation of the 177.26 channel top. But if we close above it by 1%, that is generally a solid, valid buy signal. And under that scenario, if we did close above that channel top, that is a good sign to go long this market, because I'm looking then for, roughly another 20% plus gain over the following, 2 to 3 weeks, 5 to 8 weeks, depending on volatility. It could take into April, later April. It could happen within 2 or 3 weeks, given the presently heightened volatility. So if we do close above the 177.26 formation by at least the 1% margin, then yes, the 218.70 full channel extension, kind of a full 100% move that reduplicates the width of that channel formation as a target would be expected. And of course, we are already in uncharted territory, so to speak. There's no telling where this stock may end up a year or two from now. What I'm providing you right here is what I call near to midterm analysis. And it's useful for those of you who like to trade 2 to 3 weeks out to 2 to 3 months out. That is the scope of Wicked Signal. So once again, closing above 177.26 at the end of this week by at least a 1% margin, or that formation wherever it may be between now and the middle of March. And I gave you that number a moment ago. You can back up a bit on this video to see where it is. By at least a 1% margin, we've got the 218.70 level rises at 226.45. 4 weeks later, that becomes a viable, realistic objective. That would be a 20% plus move to the upside. Until then, holding below 177.26 allows the market to back off a full 20%, back into the 135.10 to 142.79 area. Now, if And I'll leave you with this. I know some of you trade options aggressively. If you're not in the stock, you could consider buying puts, below this 177.26 channel top, selling calls if that's what you do. There's more risk there, of course. You could buy puts, sell calls, and certainly you're going to cover those positions with a settlement above the 177.26 formation. But if you do sell calls in this vicinity or at 177 and change, so to speak, if you do sell calls or buy puts, then you're going to cover those positions, of course, on the way down at the 135.10 structure. I think that is really all that needs to be said for this particular Wicked Signal video on Match Group Incorporated.